of background into the implications this has for retail. So, I mean, digital payment options have exploded in the last year, and there are really big implications here for retailers. This past year, we saw the rollout of Apple Pay and Android Pay and Samsung Pay, but retailers don't want to be left out of this, and they're launching their own payment platforms. Many of you might have heard that Walmart has announced Walmart Pay, and Target is reportedly exploring its own mobile wallet. And somewhere in Ohio, we've got a consortium of retailers that includes CVS and Walmart and Target and Gap working on a platform called Currency, testing that out right now. Digital payment adoption is low. You know, we can't sugarcoat that, but it's growing fast. And Juniper Research estimates it will grow at about 100% this year. We've got a long runway. We're very early. There's a lot to be done. The benefits of digital payments are many, and the stakes are really high. Retailers are very, very excited about this, and they're also a little hesitant. But you know, the ones that are doing it early and doing it well have already started talking about results. Kohl's estimates that roughly 30% of its mobile traffic is tied to use of its new digital wallet that it just rolled out this year. That is tied to a very strong loyalty program that they have, and they're growing it and really excited about it. Walmart, no small retailer, has 140 million customers, and 50% of its Cyber Monday purchases were from mobile devices. Or it's online, sorry, 50% of its online Cyber Monday purchases. Now, our panelists today offer a pretty good representation of the many benefits and applications of digital payments at retail. I am going to go ahead and let each one introduce themselves. We're going to start asking questions and have a lively conversation. This goes beyond mobile wallets, and we can talk a little bit about how cashless payments are yielding some really great data, and it's the data that the retailers really love. But Maeve, if you don't mind introducing yourself, that would be great.
Maeve, McKenna, Duska. I'm with Technlogies. What our company does is we specialize in what we call self-service retail. So anywhere where you would normally put in a coin or use a dollar, so you can think about vending machines, commercial washers and dryers, and laundromats, parking kiosks or parking meters, amusement games. Those are our markets. So it's really been a historically cash-based business, and still very much is. That's been migrating to cashless payments. And then on top of that, with mobile payments coming into the foray, it's really accelerated what we're seeing as tremendous growth in our market. So we have a lot of great data, and I'm excited to talk about it today.
Thank you. Scott?
Sure. So my name is Scott Amyx, and I'm a thought leader when it comes to wearables and IoT, and I'm representing Affectio. And if it's okay, I'll just spend just a couple of minutes telling you a little bit quick story, just to put a little bit of context, because I'm a little bit different from the rest of the panelists here. I'm going to put out a rather controversial statement, which is that many of these contactless payments are really cosmetic in nature. Now, why do I say that? Because whether we're talking about NFC chipped enabled cards or Apple Pay or wearables, fundamentally we're still using the same underlying infrastructure, right? A unique account number and same middle and back office systems for payments and transactions. Now the exception, of course, is Bitcoin or more broadly blockchain technology. Now one of the things that we're very interested in talking about and exploring is a new payment method based on human data analytics. And glad to hear that there's analytics involved here. Money has come in many forms over the centuries, from precious metals, paper, seashells, right? One of the phenomenons that we're starting to see from a societal perspective is this rise in the use of emojis, photos, and videos. Matter of fact, one carrier indicates that 80% of their traffic was attributed to Snapchat. And of those Snapchats, it included 50% of those included emojis. Now, why am I talking about emojis and photos and videos on this panel? Because underlying each of those emojis and Snapchat is what? Is their emotions, our feelings. Human data analytics is really about how do you start to understand and quantify our human emotions. And take it even further, you can actually start to turn those human emotions into digital currency itself. And that's a very powerful notion that hasn't been really explored, and I'll be exploring that on TED Talk. One of the things that's very exciting is, if you've actually followed Bitcoins, there's a notion of Bitcoin mining, right? Where you mine, and as you mine and solve algorithmic problems, you're rewarded with Bitcoins. Here, instead of mining for Bitcoins, we have an opportunity to mine for emotions. Matter of fact, when a happy micro moment is detected, it registers a personal empowerment point, or what we call PEP. That PEP, in effect, becomes a digital currency. What we're talking about is your emotional reaction to things and brands generates an economic value. And it becomes the ultimate brand engagement metric. So that's my little story.
And then we have Dave Skaff, who's the co-founder of the Science Project.
Yeah, co-founder of the Science Project. We're a New York-based agency that specializes in retail and fashion brands. So we really started off doing a lot of brand and e-commerce work about 6 years ago, and that really led us into doing a lot of technology work in stores for a variety of clients, from Kate Spade, Uniqlo, Bloomingdale's. And so a lot of the work that we do is sort of part marketing, but then very operational as well. When we're bringing work into stores, we're working very closely not only with the marketing teams of our clients, but also with the in-store and in-store technology teams. And so I think I'm here to sort of bring a little bit of the perspective that I'm seeing from my clients about cashless payments.
Thank you. And then C. Lee, who's the Senior VP of Payments Technology and Innovation at Synchrony Financial.
Yes, good morning. My name is C. Lee. I'm from Synchrony Financial. I'm guessing that many of you here have not heard of Synchrony Financial, and that's because we actually had an IPO in 2014, July of 2014. In fact, it was the second largest IPO in 2014, second only to this small company called Alibaba that many of you may have heard. So before then, we were called GE Capital Retail Finance. We like to call ourselves an 80-year-old startup. So last year in November, we went through the entire completion of the separation from GE. So we are now an independent company. So what do? We are the largest provider of private label credit cards in the US, where we financed over $103 billion of transactions in volume in 2014. And because of our deep relationship and engagement and integration with our retail partners, we have a very unique insight into understanding how consumers shop and how consumers behave in at the payments arena. And that's where my personal passion sort of intersects with a forum like this. It's because we continue to be committed in delivering innovative solutions and integrating credit products into the payments experience altogether. Great to be here.
There's a lot of excitement, obviously, in this room and in the industry in general. As an editor, I write a mobile story every day. I could probably write a new cashless payment story every hour if I put my mind to it and had the bandwidth. And so there's a lot of excitement, but there's also some caution here. And I think it's important to have the retail perspective. And Dave, I'm wondering if you wouldn't mind jumping in with just kind of a little bit of where the technology is today, and is this a situation of a technology coming before the market a little bit?
Yeah, I mean, I don't know if so much as a technology coming before the market, but as sort of maybe a mismatch in timing between when a technology was advertised and then what it takes to actually grow up. I mean, to be honest, when you and Robin asked me to be on this panel several weeks ago, I thought I would be the biggest evangelist for cashless payments. And as I've sort of really started to ask around more with my clients about what this year looked like for them infrastructurally, when cashless payments were going to be really important to them. I mean, a lot of them, sort of just shrugged and said, I have so many other things to worry about right now, and I've had so many other things to worry about over the last 18 to 24 months that it's just really not a huge priority for me. So, there are obviously, a number of retailers who have enacted these programs, but for those that haven't, they've just got so many other things to work on right now. And so, it's one thing for technology providers to come out at events like this and their own events and sorry, did my mic just go out? Announce the advent. But it's another thing for all of the other technologies like the middleware and back-end systems that are needed to support that to grow up around them. So it's one thing to sort of, download an app, but if that app requires a lot of third-party services, then there's, that's just going to take time. We've seen this with beacons, which, have been sort of, everyone's kind of waiting for beacon-enabled technologies to sort of come to retail and other spaces, but they haven't yet. I mean, it was really only this year that the middleware to manage large-scale beacon networks came to be. So, the time that, groups like mine can actually start working effectively with clients to talk about doing something real with beacons, and I think the thing is true of in a place where a lot of middleware and the third-party sides really needs to happen. I mean, the announcement of Apple Pay, Samsung, any of these payment systems is really the, not the tip of the iceberg, but the tip of the tip of the tip of the tip of the iceberg. So I think we need to really, and most consumers don't really know that. And I think that's an issue. And then I'll just add one more thing is that, when you're talking about, doing something online, even if it's, mobile, on web, things can change there much more quickly. But when you're talking about the retail environment, when you're talking about working with brands that have 40, 400, 1,400, 2,000 stores, getting a piece of technology in there that requires a physical presence is, a multi-year endeavor to begin with. And then there's the very human problem of managing the staff in the store to, be trained on new technologies. And that's, these are enormous multi-year endeavors. So it shouldn't be surprising that, this early in the game, we haven't really seen it come to the fore yet.
And in addition to the vast number of stores out there, we have a lot more touch points as well that are now being enabled by cashless payments. And Maeve, I was hoping you could share some of your research. They have really wonderful demographic information about who's trying this and who this early adopter is and where it's working best at the moment.
Yeah, absolutely. So we talked about this a little bit in front of the panel. First of all, I think to this date, mobile payments in general has been very fragmented. Many different players coming to market, brands kind of doing their own thing. With the advent of Apple Pay, and Android Pay, Samsung Pay, and others, those are the units that are going to help to push the technology into the marketplace, which is easier for consumers. Nobody wants to have 10 apps on their phone that are all specifically for payment at different places, at 10 different places. So I think that will help. The other thing that we talked about is really the real ability to be able to use it wherever you go, and how do you start that habit? So a big box retailer, you may go into a big box retailer once a month, once every couple months, make a big purchase. That's not really the way to create a habit. But we talked about the popularity of Starbucks and their loyalty application. One of the reasons why that's so popular is because people drink coffee every day, sometimes multiple times a day. Likewise, markets that provide these services, so vending machines, coffee kiosks, parking meters, laundry, those are everyday purchases. Those are where the habits are going to be formed. So if we can accept mobile payments in those locations, then over time, as people become more and more dependent on those mobile apps and those payment systems, then those habits get translated into other parts of their life. So as a for instance, some of the units that we're showing now, I won't be able to describe, but some of our more technologically savvy and also younger demographics are migrants and faster.
Yeah.
Element, but looking at the entire commerce experience, right? So how do we understand what the consumer's needs are, and how do we figure out how to focus on how to capture the point of intent, right? At the right point, at the right time, and understand, again, maybe this is an example where Scott also mentioned is, how do we understand the emotional proposition there, and how do we reward that emotionally based on that unit of need was there, right? So if you look at the entire e-commerce experience, not just the payment, I would argue is a very transactional experience, but if you look at the e-commerce experience and start transforming that transactional experience into more relational experience, then I think that's where you can actually start impressioning the growth for the loyalty.
And we just have a few minutes left, but I'd love to leave it with your thoughts on where you think digital payments will be at the end of next year or 5 years, and what the trajectory is for each of you. We've got a lot of barriers to adoption, there's no question, both on the consumer side and getting retailers to invest and take risks with this. And see if you have the mic, if you don't mind starting with that and
Sure.
passing it down.
I think there's a couple of things. There's a sort of an aspirational aspect from an issuer, and I think there's the aspirational aspect from the consumer. I think the intersect is the acceptance, the location of acceptance. So today, you see many different technologies, whether it's Apple-driven or Samsung-driven, Android-driven, or other merchant-driven. So I think at the end of the day, understanding where I can use this particular technology and having more of those places available to the consumers, I think that's going to be a big win. Also, as an issuer, we follow the same route. The more acceptance points are made available for consumers, the more utilization that we'll have in on our side as well.
Thank you. Dave?
I mean, broadly speaking, I think that the Internet of Things is going to be a sort of a slower roll than we've seen with just sort of pure digital. I mean, IoT is very exciting right now, but it requires so many integrations and it requires so much outreach into the real world by definition of the word things that I don't think we're going to see exactly the same sort of speed of adoption and permeation of technologies that we've seen with purely digital things. So I think that's one thing to sort of keep in mind. I mean, frankly, I don't think from the perspective of retail specifically that we're going to be very far from where we are now in a year. I just really don't. I mean, talking to my clients, over the past month, it's not a huge priority for them. And again, I think that, when you talk about retail, you're talking about, an implementation cycle, of a new technology that runs from about now in the year until about July or August, because nobody wants to be messing with anything past that when they reach, the fourth quarter. So, just again, speaking to my clients over the past couple of weeks about what they have planned for this year in regard to this, none of them are going to make huge strides this year. I mean, I have one client that's in the middle, right in the middle right now of a 3-year rollout of a new POS system. They're not worried about this. So I think from the perspective of retail this year, I don't think actually much is going to change. 5 years from now, I think actually a lot will have changed. I think 5 years from now, we'll probably have fulfilled the promise that that was made when the announcement of these technologies came out, maybe 18 months ago. But I mean, again, chip and pin just came into place in America. I mean, that's been standard in Europe for a long time. Consumers are viewing that as or American consumers anyway are viewing that as state of the art. So we got a little while, a little ways to go.
And they also have viewed it as an intrusion, and the message that you can't release something before the fourth quarter is very poignant, because we saw retailers this year turn off their EMV, their chip and pin programs, because they didn't want to slow down processing at the checkout. And consumers were quite happy to not have that added layer of security so that they could get through faster and get out of the store. So, Scott?
Yeah, great feedback. Yeah, from our perspective, because we also consult to some of the largest retailers around the world, I think there's potential customer that's here as well. One of the things that we do is 5 years, yes, there's going to be some transformational change that's going to be happening, but near term, we're really involved in the strategy. And going back to Xi's comments, it's really around the transformation of the full value chain, the full e-commerce lifecycle. Transaction component is just a piece of it, but at the end of the day, if that customer is not vested in your brand, they're not going to spend their wallet share with you. That's the reality. So it's about the volume, and for us, we're trying to help accentuate the amplification and the connection, emotional connection, particularly with the brand and the merchants. Because when you have that frequency, when you have their mind share, when you have their piece of heart, they're more likely to spend their dollars with you. And those are the places that we're looking at. Specific to retail, we're also actually incorporating IoT and wearable technologies, but not in the sense that you're probably thinking. Many retailers are hesitant or apprehensive to spend a lot of investment into hardware. Rather, the kind of advising that we do is, how do we use your existing set of capabilities? So your CCTVs, for instance, how do we start to use those feeds for emotional and cognitive and facial recognition, for example, with their permission? How do we use Wi-Fi aware capabilities and some of the new things that's coming around that gives us a more precise precision around your context? How do we start to interact with the actual NFC as well as other beacon technologies that's already there perhaps that can get down to product level specific information? At the end of the day, we want to follow the entire brand engagement lifecycle, both from an online to the offline, and then be in a position where we integrate with e-commerce, integrate with CRM and campaign management system to actually identify that specific moment when someone is shopping at your store and recognizes that they have an emotional reaction, a positive reaction. We measure that through the phone, we measure that through the smartwatch, we measure that through the environmental IoT that's already in existence, and we send that to the campaign management system, which then sends a message to their smartphone or their smartwatch and the digital signage nearby saying, hey, we just recognized that you really, really like that purse. Your emotion just unlocked additional 20%. That's the kind of capability that we're working on.
So I think unlike what Dave is seeing in traditional retail, for our markets, for the self-service markets, we think that there's going to be a huge acceleration over the next few years. We don't have to worry about swapping out point-of-sale devices, as he was talking about, because most of the machines out there don't have them on them. They're moving in that direction now. Most of them are still cash-based. There's 6 million vending machines in the US, 6 million washers and dryers. We're the market leader. We have about 350,000 connections. Huge greenfield of opportunity. And so folks are just moving in that direction now. And since they're moving in that direction now, they're doing so with NFC capabilities already in place because they know that that's going to help their business. So I think really that's where it's going to start. It's the gateway tap, right? That's what we call it at USA Technologies, and Laura touched on it a little bit. Consumers are not going to be comfortable walking into a big box retailer and making a major purchase for the first time using Apple Pay or Android Pay. They're going to go to the vending machine, which, by the way, your Apple Pay and Android Pay automatically pop up your card ready to pay if you're set up. You're prompted, and you might think to yourself, well, let me give this a shot. It's $1.50 soda. And you do it, and it works, and now you have the confidence to go to a retail line or a supermarket where there's people behind you, and you know what to do. You're not scrambling. You're not kind of futzing around. So we think that that's really where it's going to start. There's a lot of excitement there. And we think that once consumers are starting to use those mobile payments in those everyday purchases and they become reliant on it, then it'll trickle up to the big box retailers, and it will become important to them at that point. And I just wanted to say, I can't believe it took us all this time to get the words EMV out in a cashless payment and retail summit. So the other thing I wanted to say is in our space, because EMV, the transaction, is a little bit kludgy right now. Consumers don't know what to do. It takes a little bit longer. They're still getting acclimated. We think that people are going to jump right to mobile. They're going to leapfrog right over EMV and go right to mobile. You want a quick soda, you want to do your laundry, you want to park your car, you want to pay for it, you want to get out, and you don't want to have to wait there for the transaction, try to figure out how to use the EMV chip and PIN. You're going to use your Apple Pay wallet, you're going to make your payment, you're going to be on your way. So for us, we think that EMV has been a bit of a distraction in the retail industry, and that it's very likely that the consumer is going to win the day and just say, enough, it's easier for me to use my mobile.
I think it's a very exciting time to be involved in digital payments right now, and there's a lot of runway and a lot of opportunity to disrupt the space. Everyone's got a stake in it. Thank you very much. Thank you, guys.
I'm going to